Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly market update for a wild and crazy week. This is April 10th, Thursday, April 10th. So welcome. Hope everybody is having a fantastic week and a fantastic week of trading. If you are getting long and then short and then short and then long again and then short and back and forth, because that's what it takes in this kind of market. And of course, I'm joking, but it has been a wild and woolly week. So let's dive in real quick. Today, I'm going to start with the ES, the S&P 500 and the ES as the surrogate for the overall market. And so the light gray, this is the cash session. This is the overnight session last night. This is the face-ripping rally that we had yesterday. That was just crazy. But if we look today, you look at this, and it doesn't look that bad. It looks like just kind of a normal day, right? But if you do the math over here, from here to here was 200, and I wrote it down, 250, I think 257 point from top to bottom, and then kind of sort of back up and came back down and landed somewhere kind of in the middle. That is a lot of movement on the S&P 500, a lot. And if you guys trade much, or you've been around trading for any length of time, you know that when we normally get a 35, 50 point move, it's a huge day, and then a 100 point move is kind of just so out of the ordinary. And now, on a daily basis, we're going 200, 300 or more. For example, from this is black session right there. The black is from yesterday's cash, the daily session, right? So from that low to that high is 500, I think it was 550, about 550 points, kind of roughly. Crazy. It was a little bit, it was actually more than that in the S&P. I think it was like 570 something, because the ES and the SP aren't exactly one to one. But anyway, huge, big move. And you guys have read all the stats. It's kind of crazy, all the stats that I saw thrown out. I know it was the biggest one-day move ever in history for the Dow, and I think it was the 8th largest for the S&P and the 9th largest for the Nasdaq. That kind of thing. All kind of crazy stats. Big day. We have face-ripping rallies in the middle of honestly a bear market. That's what we're in, and the downtrend, right? So what's interesting, if you I use Fibonacci work a lot. My wife is trader Tammy, and she runs a lot of Fibonacci work for me, and just general, just ballparking this stuff, high to low. If this is 550 points, you would expect some kind of retracement. Well, a 50% retracement of this, half of that gets you kind of what we got today. So basically we go up that much, and then you expect it to pull back in general. So this, and this, I'm ballparking here. Don't throw rocks at me if you're a technical analyst, but trying to keep it short and sweet. Overnight we had this, started selling off, and on one hand I was thinking we could get some follow through here, but odds are that we didn't, and of course we didn't. I didn't think we'd come back that much, but we did. But that, again, that's pretty normal. So let's take this. I'm going to stick with the ES, and let's go out. And if you have not been watching, this is the fun that we've been having every day. And honestly, it's been okay. I'm still profitable for the year. I'm hanging on. It's been tough, and a lot of movement. But again, from here to here, that's a lot of movement. And then this is where it really started happening, right? And this is when we're kind of free falling. This is our voodoo skyline up here to our voodoo tree line down here, and straight up and straight down. And that was yesterday, and that's today. So does this path keep continuing and we go higher, or does this break down and we go down here and take that out and keep going lower? And honestly, no one knows. Let me show you on a longer term chart. The shorter term chart, this looks like I could make a case, for this continuing higher here. and us working our way up, right? On the, if you look at it, that's a 20-day chart. If you look at it on longer term here, not so much. We fell off the cliff here from our, that's the all-time high, you know, for now. Straight down, small bounce, straight down, small bounce, and then that's when we got the big flush down, all the way down, and then all the way back up, and now we're coming back down. This does not, that does not look good. We have traveled so far, so fast, so quickly. This is one of the steepest, the fastest declines that we've had. And I had the stat earlier today, and I couldn't find it. I think we dropped 15% in 10 days or something crazy. Again, this just doesn't bode well. So what we need to look at is, what's causing that. Of course, we know it's tariffs. So where are we on that? I guess that's the biggest thing. So today's April 10th. We got the 90-day pause. That move right there. Do you remember? You guys remember on Monday? Let me zoom back in here. Remember on Monday that this is Friday, and this will be heavy selling Thursday, heavy selling overnight. Just fell off the cliff on this Blackest Friday's cash session. Fell off the cliff, and then we're kind of chopping around. Same thing. We would expect to bounce a little bit after that much of a sell-off. And then we got this big giant spike here when the market opened up on Monday morning. And guess what that was for? If you weren't watching, that was, there's going to be a 90-day pause in the tariffs, was the rumor, quote unquote rumor, right? And then the White House denied it, said it was fake news, it was a rumor, all that kind of stuff. And we immediately, sold off, and then we kind of kept chopping, and then we sold off. And then right here is when they announced the 90-day pause on the tariffs, which again was same thing over here. So kind of makes me scratch my head a little bit there. Not good. Obviously it was leaked by somebody that was happening or whatever, but anyway, that's for another conversation. But anyway, so let's look at the timeline. Of course, if you guys remember from when Trump was in office last time, tariffs and tweets and all that kind of stuff make the market go crazy. Same thing here. So we've got a 90-day window to resolve most of this. Honestly, I think, some people are going to love me, some people are going to hate me. I think it's a good thing because it needed to happen at some level. Now, the way it's been put together is pretty aggressive, maybe that's the right word. But I think it probably had to be to make things happen quickly and make everyone know that this is serious. We got to get it done and all that kind of stuff. Again, we can have a whole hour conversation about that. But the point is, a lot of this stuff will get resolved very quickly. China's the holdout. The EU probably is a pretty good holdout too, because they're looking at that as one package, I guess. So a lot of this will get resolved and so forth. But is it going to get resolved soon enough to, if we have more uncertainty and it delays, and we keep going down here, take this low out, we can go lower, starts getting resolved quickly, maybe we come back up here. Who knows? On top of that, check this out. We've got earnings season starts really tomorrow. We've got all the bank, or a lot of the bank stocks start. We had some today, got some tomorrow. All next week we'll have in here, we've got Netflix and Tesla, and then the first part of May we'll have Amazon, Apple, Microsoft, all that kind of stuff, right? We'll have PCE, I think it's there on the 30th, on April 30th. And we don't have a Fed meeting in April. We'll have payrolls on May the 2nd. We'll have the next CPI is on, when is our next CPI is May the 13th, I believe, and then we'll have PPI. So there's a lot coming up here. We do have Fed meeting on May the 6th. So, be ready for that. Hold on to your hat there. I don't know what's going to happen there. I think we're going to get more rate cuts this year than previously expected, especially if the market continues to get worse. So the bottom line, if you listen to the videos that I've been doing lately, actually for quite a while, since the first of the year. All this stuff up here made me extremely nervous when there's no trend here. You go up, you go down, you go up, you go down, you go way up, and you sell off. This was, and this is the Santa rally right there. And that's kind of when it ended. This uncertainty made me go to mostly cash. I've only had just normally I have 8 or 10 positions on, and I've got like 1, maybe 2 at a time. And then here I've gone to like put one on and then take it off, and then put one on, take it off, and short, and buy and all that kind of stuff. So that's what you got to do in this market. So the bottom line is keep a lot of cash, be ready for opportunities. Don't take a trade that doesn't have an edge, and trade trade with stops. And it doesn't matter if, like yesterday, if you were short and the market's ripping up, pay whatever you have to pay to get out, because it can keep going and going and going. Same way on the downside. Spreads get very, very wide in a market like this. So if it says the quote on your debit spread or whatever that you're doing, not individual stocks, but on options, if you're buying a debit spread and it says $4, it might be, and you're trying to sell it, it might be $1.50. If you're trying to buy it, it might be $8. I mean, huge, wide spread. So be aware of that in a fast market. It can really bite you. So be careful of that. It's just hard to get in and out, liquidity, and that type thing. So for now, be very careful. One last thing, let me show you this. We'll just do simple moving averages here. We're way below. That's the 200-day. That's the 50. That's the 20. I think there is probably a better chance that we come up in these moving averages and get rejected back down, even if we get to 200 and rejected back down. And I hate to be bearish, but these are bearish charts. You're way under these moving averages, and it does not look good. Let me show you real quick. Hang tight just a second. So we look at a 5-year chart, and I'll zoom in here. When you get, there's 200-day. When you get below the 200-day and the market tries and it fails, and you see this is the 50-day and that's the 20-day, and it tries and it gets back up 200-day and fails, and comes back up 200-day and it fails, and tries again, it fails. This goes on and on and on, and it just goes down, 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 down. So basically, it starts that downward type channel. I think that's absolutely where we are right now. And I think, unfortunately, I think that probably continues, like that. So don't give up on the longs, but be very careful and be aware that just because someone in the media, take this all with a grain of salt, because I'm telling you the same thing, but someone says, this is the bottom's in, buy the dip. Don't go all in guns blazing. Just be careful and scale in, as you go until we get more clarity. We've got to have some clarity, before we get back in. There is no trend here, and when you don't have a trend, you need to be very, very careful. So I hope that helps. Hope it makes sense. Come join us at Simpler Trading in the main rooms, or I have a separate room called Bias. I'm in both those rooms, and we talk about trades all the time, and discuss things and talk about strategy and stuff like that, look at charts. So try to join us in there. Be glad to help you any way that I can. So with that, let me wind it up. Good luck and good trading, and I will see you guys at the next update. Thanks. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me